Well, let's now turn our attention over to the grain markets. This week, we caught up with one of our regular market analysts. Darin Fessler is with Lakefront Futures and Options. We had the chance to sit down with him here at the FFA convention on Wednesday afternoon. Let's talk about these markets. Let's take the old crop first. What do you see in there, corn and soybeans?
Yeah, old crop, we've had a really nice push up, into this report. And I think that given the push on basis in a lot of locations, given the market rally, I mean, we're up roughly 50 cents off the low. You've had really good spread action between the May and the July. At this point, I think you need to reward it. I've always been in the type that I never like to see big run-ups ahead of a report. Same thing I don't like to see big down drops. It's too big a report not, I think, to reward this market at this point, given maybe some of the weaker year-over-year exports we've seen, even though exports have turned around here recently and a lot of good sales to China. We're just continuing to play that catch-up. So I'm just telling guys here is, reward this old crop. I'm not saying we can't move higher. It's just ahead of this report, you got to keep moving it higher, and I think just reward this market and look for your ownership strategies maybe on the July or September contracts.
We'll talk report here in a moment, but anything different the way you feel about corn and soybeans for new crop?
New crop beans I'm a little bit concerned about. And the thing with the bean market, though, is if we don't get these acres, then I think it's a whole nother ball game if we run into weather. Tight stocks-use ratio across the board. And so if we get this market back up towards that 1380 to 14, it's an absolute must area to do something, be proactive with the marketing. And same thing with December. I think we had this big push lower here. I think it was more of a wake-up call for most producers than anything. I think there are a lot of unknowns still left to be played out here. $5.80 to $6. If you haven't done anything, that's the area to reward this market. Again, at least think about it.
All right, challenging topic for us this week to talk about the report. You and I are recording this ahead of it. Reports will come out on Friday. So let me ask you this: what matters? What are you going to watch after those reports come out?
Obviously, this is kind of like the second Super Bowl. The Super Bowl of the first year is that January 12th report we summarized whole of last year. This is the second Super Bowl of the year, that acreage. We're going to get that number. And granted, I think given the tight stocks use, yes, the acreage matter, but I think it's the quarterly grain stocks that are going to matter a little bit more here. We're looking at 15-year lows in the wheat market. We obviously know that there's a lot of dryness in Kansas in that winter wheat country, and then spring wheat, North Dakota, plenty of snow on the ground. So there's that dynamic as well going on in the domestic wheat market. So I'm very, very interested in what the USDA believes is going to come to be of that wheat crop, and in general what the acres are, because I don't think a lot of these acres are going to get harvested. I think they're going to get abandoned.
You bring up wheat. I want to talk a little bit about some of the news that came out this week. The Russian grain exclusion of sorts. Some grain merchandisers came out that they're going to be shutting down their grain elevators in Russia. Is that going to have an impact on the domestic wheat prices here?
I think that some of this uncertainty about Russia, Ukraine, and that whole Black Sea region, I think is some of the reason why we've seen this big push up in some of this wheat market. But I don't think that narrative in itself is, I don't think, going to move the needle much more. This wheat market is getting overextended leading up to this week's report.
Tell me more about that, overextended, what you mean by that, and where you see the wheat market going.
Yeah, I still think wheat can move higher. I think the nearby, like the short-term time frame, is probably a little bit overbought, especially the Kansas City and the spring wheat. I think Chicago more or less is just following suit, and I think if wheat can move higher, given the strong correlations with corn is going to move higher with it, and I think that's what we've seen so far.
Let's go back to old crop on corn and soybeans in particular as we get to one of our viewer questions this week. One of our viewers wrote in and asked, is there an argument to hang on to old crop at this point? Your 2 cents?
Beans, I've been sold out of old crop beans since Christmas. I think there are some reownership strategies in play, but as far as old crop at this point, you're really playing for the summer market here on old crop corn and beans at this point. And again, I think the push or the risk here on old crop corn is if you look at the May-July spread, May is about 20 cents over July. Do the commercials start pulling those May bids and focus on that July? We've seen that last year. I think that's a risk for this market.
Another question we got, interesting question. I'm curious your thoughts on this. It doesn't necessarily have to be tied to the ag side, but one of our viewers asked, what is undervalued right now?
I think the cash market, or at least the board in itself, is live cattle. If you look at cash feeders relative to idea of you're going to fatten them up, there's no money there in that game at the moment. I think either one of two things are going to have to happen. Cash feeders are going to move lower. I think that's highly unlikely given the fundamentals. Or feeders or live cattle need to move much higher to make this more profitable for producers. In general, I think the overall commodity complex as far as cattle are still fundamentally bullish. The thing that concerns me is the outside markets and the economy.
I'll let you get the final word on grains here in a moment, but I'll stick on the livestock trend. What do you see in the hogs right now? It
Yeah.
is a tough market.
It's a very, very tough market. I think you, at these levels, given beat up, I think you look for opportunities to get long this market anywhere on the June board around that $90, $89. I think that's an opportunity to get long in friendly cattle or friendly hogs.
All right, this broadcast will come out April 1st. A lot of, I'm sure, excitement in the air as planters will be rolling here in eastern Nebraska a couple weeks from now. What are you hearing from producers, their sentiment going into this planting season?
You know, I think there's still a lot of optimism about what may transpire, because you still have these good basis levels, you still have tight stocks-use ratio, and you still have a weather that forecasts is, you know, we've been coming really dry, you know, in parts of the southern plains. Does that creep up? Because again, you look at western Nebraska, they're coming off a major drought. There's a lot of optimism, I think, but guys are going to be willing to unload these bushels if you're getting north of $6 on that December corn.
Let's give you the final word. What else do you want to bring up we haven't had a chance to talk about just yet?
I think the most important thing is, if you get rallies in this market, do not be afraid to be aggressive. If you don't have weather, I think the chart pattern suggests maybe a 2013, 2014 type move. So lower levels could come. The key thing is the weather, and again, that's why we're somewhat friendly these grains at the moment.
How aggressive for new crop have you been so far?
Right now, on the hedge side of things, we're utilizing a lot of options, but we're probably 30 to 40% as a collective group on corn and 35% on new crop beans.
All right, Darin, we appreciate your time. Thanks for
Thank you
joining
so
us
much
here at the State FFA Convention.
You bet. Thank you.